as well. Thanks everyone for joining. I'm super excited to host this panel with a great group of individuals here. I think quick background myself, as Will mentioned, I'm Director of Markets at the Urbit Foundation. I think my background is in traditional finance. Started my career in banking, then traded high yield bonds covering software. First got into crypto in 2017 as a natural lover of markets. That naturally gravitated towards that, and have been following Urbit since around 2019 or so, actually through Christian from Terrell. And I'll let everyone else give quick intros about themselves and how they ended up at Urbit.
Awesome. Thanks for having me. Before I was a VC, I was an engineer, and I was actually an engineer for much longer than I've been an investor. This started CoinFund. So CoinFund today is a company of about 30 folks looking at basically all of blockchain and decentralization technology. Our mission is to champion the leaders of this new internet, which we've been doing since 2015. So it's our 9th year of working full-time in this space and understanding how decentralized networks are built. I learned about Urbit in 2016, on a call with Galen and Joey Krug, and this was a time when we were helping companies do their token offerings, which Urbit was doing at the time. They were selling stars. And so that's how we actually ended up becoming investors in Urbit for the first time. In 2018, bought a Galaxy as well. So we've been very excited to watch this ecosystem grow from very early days to what you see here today. It's been really exciting.
All right, I'm Jae Yang. I too am an engineer, and I actually worked in aerospace field, defense field for a few years, about 9.5 years, and it's a very narrow field, so expanded into software engineering in general. And first time I heard about Urbit was LambdaConf and the strange loop situation. So, and then after that, read more about it from this weird blog about Martian computing written by some horse. And after that, it was all down the rabbit hole, so to speak. So yeah, and I'm just very excited to be here with, really, high-powered luminaries here. So just happy to be here.
My name's Evan Fisher. I'm not an engineer. I grew up as a bit of a finance nerd, I'd say. Very windy path to get to this seat today. Started my career at Goldman Sachs covering industrials. Joined Insight Partners in early 2019. Saw them grow into the largest global venture fund, helped invest about $600 million across software, internet, fintech, and then eventually crypto. And I launched in late 2021 Portal Ventures as a spin-out from Insight on the idea that as software did to products and businesses, protocols are going to do to the economy, to products and businesses over the next couple of decades. I first learned about Urbit in 2020. I was living in Mexico City in a share house with one of the developers. I knew nothing about it, didn't understand anything that was said. Immediately bought, though, on my personal side. From there, I'd say I spent 2.5 years trying to understand what Urbit is. At some point in 2022, it clicked. I said, wow, this is as big of an opportunity as blockchains themselves. And so invested from Portal Ventures early this year and have been active across the ecosystem.
My name is Dmitry. I right now work for a perpetuals DEX. Helped build one called RabbitX on StarkNet. And my background is very varied, kind of a peak generalist. I have done a fair amount of political and financial writing for some handful of fairly well-known publications, and under my government name, MeatSpace name, not under, And then I worked in TradFi for a bit as a risk analyst, on a hedge fund desk, kind of understanding how portfolio margining and all that kind of risk sort of works, and that was my kind of technical underpinning. And then I worked in Manhattan for a handful of years, 6-7 years. From B2B sales, fintech sales, selling to corporate leaders, things like that, financial technology. And it was one of a classic kind of bull market genius case with the recent run-up, mostly in SaaS stocks, frankly. It was not actually in crypto. Made most of my money there, then got wiped hard enough to kind of start getting curious about, diving into this space from a work standpoint, as I was already really self-educated in it, so that kind of brought me back into the work arena, and I'm in DeFi now, and I can't imagine ever leaving. And I found Urbit by way of Curtis. I was reading his, UR, Unqualified Reservations, and someone asked me if I knew about Urbit, and it's like, no, what is that? And it's like, well, Curtis built it. I'm like, oh. So I mean, it just was immediately curious just by nature of liking him and him being very formative for me. And yeah, just the more, I came for the tech and stayed for the community kind of thing. Like, it's just a great vibe and sphere. Everyone here is authentic because there's no pump happening here. Like, there's no one's here for like a spike, right? Like, and I think that's a very good self-selecting method for curating like a good type of person. And that's part of what attracts me to this place so much. And yeah, so I'm here to stay. I love everything about the DeFi Web3 stack. And I don't use Web3 in a VC type way. Like, I feel like it's one of those terms that's gotten away from us that I want to define more formally. But like, everything about this space is important to me. Urbit, DeFi in general, which I view as like all allies. And I was honored to have Josh request to have me speak here. So.
Perfect. So, I think we all kind of approach Urbit from the crypto lens. And so Urbit's a very interesting project within the world of crypto. I'd say, right now you see a Venn diagram of Urbit and a lot of the other crypto ecosystems converging. And so just wanted to ask you kind of like, what is your lens of where Urbit fits? It's very hard to pattern match it to prior ecosystems. And so, just what's your mental model of how you think about Urbit?
I actually think that Urbit is probably the best example that is physically in the market of Web3, right? Because yes, we can debate how Web3 should be defined. I take kind of an engineer's definition of Web3. I think of Web3 as the stack of technologies that enable fully decentralized applications. And that doesn't just mean the storage layer, the computation layer, the consensus layer, the execution layer. It also means like the front end, right? And if you start thinking about kind of the core property of Web3 being sovereign data, and then like users owning their data essentially, and then applications being kind of stateless functions of people's data that you download and use in a private manner, which to me is sort of the essence of what Web3 is, then Urbit is really the only like true example of that, right? Like, we say we own our data on Ethereum, and it's true in the sense that we cryptographically own our data. But with Urbit, not only can you cryptographically own your data, you can also physically own your data. My Urbit data lives in my native Planet box on my desk at home. So I think Urbit has a huge opportunity, and I said this before, to sort of come to market at a time when Web3 thinking is becoming really mature and much more mainstream. And the trend that you currently see with many of these presentations here, including Terrell earlier and Zorp, is that Urbit wants to financialize more. It wants to add blockchain as an ingredient into what it's doing. And that's not an accident, because the other way that you can think of Urbit and crypto is that Urbit computers are a way of creating various forms of private consensus, and blockchains provide public consensus. And those two things are quite complementary, and you actually need both to bring sort of the variety of applications that we see already in the world to market. So that's how I tend to think about it.
I think that framing of private consensus and public consensus is, very compelling. I always think about the broader problem crypto is solving is, the friction of trust in the world. And with blockchains, you solve that with trustless consensus or trustless solutions. And with Urbit, it's a very trustful technology with how you interact with others and build applications.
Yes, but a key thing about Urbit is that it can also integrate, by virtue of being an operating system, a computer, or something programmable, it could bridge those worlds together. And as a result, you see, like what I would argue is a convergence of Urbit and Web3.
Right. Evan, I know you wrote a piece recently on
Yeah.
on your thesis.
I think of it in a way that's overlapping but orthogonal. And if you think about what's being built here, let's think about it all as protocols. And so you have crypto, but that like Ethereum is just a layer 1 protocol. It happens to be a layer 1 blockchain protocol. Urbit is a layer 1 protocol. It's just not a blockchain. Like TCP is a protocol, but not a blockchain. And so we're rebuilding the internet, rebuilding the financial system with protocols that have unique properties. It's sovereign, it's permissionless, it's composable. They're all buzzwords. You could double click on them. But effectively, if you want to create that with value, you need global consensus. And we all know that for obvious reasons. You don't need global consensus for a lot of the internet. It's the wrong product to use for the internet. And so the way I think about it is blockchains are layer 1 protocols for value. Urbit is a layer 1 protocol with these properties, but for computers and software. And it's the first of its kind. Like it's as grand of an idea as going from Bitcoin to smart contracts, if not larger. And so that's how I start to think about the opportunity.
Jay, I know you've been very involved in Urbit for a long time.
Yeah.
Was one of participating in like the earliest sale of stars. What was your thesis back then? I mean, that was a very different time in crypto. I know you've been involved in crypto before.
Right. So what drew me to Urbit was my, just how I was sick and tired of like software engineering as is, which is non-deterministic computing. So when someone said, we're going to have deterministic computing, that's great. That almost sold me on it. And then when I heard even something better, which is we're going to have a frozen operating system or kernel at some point, that was even better. So I mean, it's that meme where your excitement grows with each panel. And the third one that really excites me, because I've worked in big huge company that has IoT component, your data is not really your data because it goes through someone else's infrastructure, and it goes that billions of data points land on someone else's server before it turns on your IoT enabled light, right? But that path should just be from your phone to your home device to your light, and it's all about reducing that path. And finally, like the idea of just the boldness of idea of creating a new operating system, new language, and having a comprehensive view of and very opinionated view of where it should be. That's what drew me in. Even before thinking about, okay, is this going to be worth anything? Because like with anything, it is going to be worth something, because when you read it, when you have a view as comprehensive as re-decentralizing the internet, everything else opens up, right? So that's the way I approach it, just from like perspective of I'm so sick and tired of software engineering.
Yeah.
Anyways,
Dmitry, so I know you said you came through Urbit from come for the tech, stay for the community.
right.
Yeah, I'd love to hear your thoughts on where Urbit fits into your world of thinking about DeFi and systems and this new world we're building versus a legacy system.
Yeah. I mean, I view it as, and this is something I just like spoke on, as part of a sovereign tech stack in a way, a Web3 tech stack. And by that I mean that part of that tech stack is ETH is the financial substrate. It's the way to facilitate the financial communication. Stuff like Arweave, Filecoin, IPFS is the cloud component of that. Stuff like Render is the distributed compute component of that, right? Like you're getting different means of accessing resources and communicating in a way that's fundamentally Web3. And Web 2 is don't be evil, Web 3 is can't be evil. That's just an easy way to set it up, I think, just to compartmentalize them. And Urbit is the communication component of that. It's the internet application. It's the messaging version of that. So it's all part of, I'd view as a Web3 sovereign tech stack that kind of works with itself, and they all kind of feed into each other. They'll probably be maybe somewhat composable, or things like DeFi and Urbit. There'll be front ends for DeFi on Urbit. So it's all very synergistic and complementary, and I kind of view them as all roughly the same side of the same coin, just covering different bases within this ability to access your information, your financial autonomy through a means that's uncensorable and that no one can take from you. Because that should be the essence of Web3. Like Web3, and I'll touch on this maybe for the next set of questions too, like Web3 is fundamentally like a fourth industrial revolution technology as opposed to previous ones. It's inefficient by design. Whereas like, third industrial revolution tech, second industrial revolution tech was all meant to enhance efficiency, enhance productivity. It was fundamentally accretive to corporations in the state, economically, control-wise, all that. It was beneficial for everybody. Fourth industrial revolution tech, like Web3 tech, is not, it's detractive from the state. It's detractive from corporations by its essence. That's why we're making it less efficient, because decentralized databases are not more efficient. Like centralizing that is easier. We're decentralizing that because it provides a lot of uncensorability and an ability to exist robustly and without any one party managing that. And so that's why I kind of view it also as inherently political. Because if you disintermediate those parties, corporations, the state, from your financial interactions, they're not going to take kindly to that. That's a political statement, like whether or not you feel you're making one or not. And I feel a lot of people like tacitly pick up on that subconsciously. I think that's why I can probably guess like 85% of everybody's political affiliations here. And if you have an Urbit planet, I can probably guess like 93% of them. So there's something to be said there for that, because I think that's imbued in its like essence is to be, it's politicized, just in a way that I think is very productive and doesn't like unnecessarily do so in an obnoxious way. So yeah, that's kind of how I see those boundaries there, and Urbit plays a big role in that.
That's great. So Urbit's obviously a very old project. Majority of the time to date has been built on core infrastructure. Can we talk about like the infrastructure and application lifecycle? I think one thing that really excited me was when software distribution came out in Landscape around 2021 or so. It made it much more usable. I think onboarding with hosting is also a big inflection point. And so, it's exciting to see user-facing apps today that people are using. It's a very high retention user base. Developers get immediate distribution. So we're just curious to hear your thoughts on both the infrastructure and application side of Urbit today.
Yeah. Well, I think Urbit as an application platform has an incredible opportunity to be a front end for Web3. In fact, if I think back to that early and first phone call from 2016, the way that Urbit was essentially pitched to us was like, look at Augur. It was a decentralized prediction market platform that Joey Krug had launched. And of course, it has all these kinds of regulatory gray area uncertainties around it. And one of the aspects of the pitch was like, you can imagine a future where you run the front end to this application privately on your personal server. And more recently, people have built, in the Urbit community, people have built like Uniswap front ends that run as Urbit apps. I think there's a lot to that, especially in our current environment, where there's a lot of regulatory uncertainty, and there's certain attack vectors where regulators might go after front ends and stuff like that. All that being said, I do still think, though, that Urbit's core focus should be on infrastructure. I think there's a lot of infrastructure work to do. I think that there's a lot of development left to do, for the usability of the network, the kernel, as Ted has covered variously, and all of that stuff. What it does is it really helps the application experiences at the end of the day not just be easy to onboard to, but be retainable. And I would argue that the most important infrastructure, other than obviously kind of the core critical kernel and components, is the financialization of Urbit. Because if you put on the hat of a investor or crypto investor in particular, crypto investors are very used to investing two kinds of assets. One is the native digital asset of a network that accrues the value of that network. And two is the equity of a company that's running a successful and commercial revenue-generating enterprise. And I would argue that, and I don't mean to be combative, but in a parentally loving way, I would argue that Urbit today has not achieved either of those things. I think the native assets of the Urbit network are cumbersome, have low liquidity, are confusing to newcomers, and ultimately there's a lot of questions about if and how they actually capture the value. It's a crypto economics that was an experiment, and I'm not sure that it got fully there. And then on the equity side, I think one of the challenges that Urbit has is and you can there's a lot of investors in this house today. You can ask around. I think a lot of them would agree that we're very underfunded today. So solving financialization for Urbit through crypto-native models, through blockchain integration, through payments, through crypto-native, giving founders the ability to launch tokens that capture the value of their particular project, and then eventually becoming mature enough as an ecosystem to be extremely attractive to institutional investors. They're looking for, high quality and mature product teams. That to me is the highest leverage thing that the Urbit community can do from now, from 2023.
Yeah, and if I were to layer onto that, because I agree, the financialization is critical. And if we go back to the creation of new types of networks, and we say, how do those networks bootstrap themselves with financialization? Like, we can look at ETH in the early days. That was a new type of token. There were arguments of, would Ether be valuable? Yes, no. Like, if it's just for gas, we have more Ether than we ever need in the world. What happens, that's one utility vector of the digital asset. We say, well, what if we introduced 1559? What if we added a second utility vector to that token? It provides benefit to the network in that it maintains Ether as the core and only asset with which you would pay gas for on the network, but it also accrues value. And if we look at Urbit digital assets today, they do have a clear utility. Like, you need one to get onto the network, you need one to host something, you need one to push software, but you can add a new utility vector. And so that's really interesting to me. The second idea, though, is the apps also can use it. I think what's so unique about Urbit as a community and a network is how pure it is. It's like there's a desire to build this because it actually fucking matters. Like, the desire to build this is because it matters. And in looking at that, I think a lot of people saw Ethereum come along, ICOs come along, and it's like, we don't want to touch these. Like, that's just a get-rich-quick scheme. But the reality is they've evolved. And now you can use tokens as mechanisms to actually get people onto a network. And this isn't new. Like, if you think about Uber, Uber's a network. It's a ride-sharing network. They didn't have tokens that they gave out, but they gave away free rides. Like, you need to give incentives financially to drive people to use networks. And I think that's the next chapter of Urbit. It's a question of, like, what does that look like for the story here to take it to that next level, which accelerates the infrastructure application loop.
Right. I think, we do a lot of work internally on, our own developer ecosystem. I think it's not widely known, but Urbit's called top 15 base layer protocol ecosystem from a developer perspective. But I think to your point on purity, beyond that, it's when we look at churn metrics from GitHub, Urbit's a very low churn developer community. And I think it definitely speaks to some of your points there of, the intent of the community here building those applications. I think turning the conversation more just towards broader crypto, obviously interesting time the past 18 months after a very euphoric market period. How are you looking at, maybe we can split it up of like private markets with Jake and Evan, and what Jay and Dmitry are seeing on the public side on your exchanges?
Sorry, your question is, how do we look at the broad outlook for crypto market?
Yeah, and maybe just focus on like your private market opportunities today.
It's been a tough bear market. I think one of the reasons it's been tougher than other bear markets is because you have a bear market in crypto and you have just like a horrendous like global macro situation. And that's actually never happened in crypto before, where both of those things were true. And one of the results of that is like our investors, our LPs, like that capital went to zero. Like if you're an emerging manager right now trying to start a crypto fund, it's extremely difficult to raise. That has a bunch of impact, right? Because then there's like less capital for startups. This is the time when startups start realizing, oh man, I might be like running out of runway. They go to the market to raise, but there's no capital there. And you do see a bunch of impact like in the crypto space today. The other reason why the bear market has been tough is just to the point of some of your talks, Dmitry, earlier today, right? It's just a lot of governments and jurisdictions have taken a pretty aggressive view, especially in the United States, toward crypto. And there was like this period of time earlier this year when you'd wake up to headlines every morning that were quite unfavorable to whatever it would be, you know, SEC enforcement action against the company, or Operation Choke Point 2.0, and on, and it felt like it wouldn't end. Those are the reasons why it's been hard. What I see as a kind of private market investor, like last week we saw some public market results in Bitcoin and Ether and other assets, but on the back end I actually am getting increasingly bullish. Like I'm seeing signs that we're in a regime switch. One of those is just deal flow has picked up. I spent kind of most of this year looking at infrastructural technology, mostly in the intersection of AI and Web3, which I think is a fascinating area. I'm starting to see private rounds in the seed stage kind of tick up. I do see some startups that needed like Bridge Capital get funding, and I'm generally confident that there will be more private market investment. That's usually something that is preceding kind of a market turnaround. So I'm hopeful that in 24 or so we'll get some more results in crypto broadly.
Yeah, I would echo a lot of that sentiment. And I'd layer on, I'm really excited for next year. Like it's by no means a guarantee that we're going to turn around and we're going to see sentiment change, but there's a lot happening. Like there are a lot of companies going out. There's a lot of entropy in the system. But then on the flip side, over the past week, we'll see if this sustains, but you actually have Bitcoin operating in a way where it's not correlated to financial markets, like to equity markets. You have, realistically, a Bitcoin ETF will come out at some point over the next quarter or two. At that point, you're going to have Larry Fink going on CNBC saying, hey, this is an asset that's a flight to quality. Like, that's going to happen more. And the reality is, it's not that much of a jump from that to, oh, how do we actually get exposure to not just the assets here that are like digital gold, how do we get exposure to assets that are an index on the growth? And that's a pretty quick jump to ETH. It's like if you saw cloud coming in 2008 or 2013, and you had the opportunity to invest in a pure play AWS, you take that bet. And if you don't take that bet, it's actually negligent. It's career risk to have missed a pure play AWS while cloud's coming up. And I think at some point over the next couple of years, like it's going to turn negligent for long-only tech funds to not own Ether, because they will not be exposed to what could be a paradigm-shifting technology, and that needs to be a piece of the portfolio. And that's a piece of the portfolio. You see flows come in. They don't need to be that big, but you have enough flows come in to really start changing the pricing in this market again.
Yeah, the way that I'm thinking about it, and from the other side, from the entrepreneur side, is that it's absolutely brutal out there fundraising, and but at the same time, it's forced us to focus on what really matters, which is delivering great UX, acquiring more users, and making something of value, right? So, thankfully, we did a good enough job of financially managing our funds from when we raised it during the boom. But at the same time, Tacen itself is 4 years old, which means that we went through, 2 down cycles where Bitcoin was at 3,500, and I had to actually sell Bitcoin at 4,800 to pay my own bill and all that stuff. So, which was absolutely brutal. So this is not that bad in my view. Of course, a lot of people got hurt, and I think the way that if you look at the market as it stands right now, it's like a coiled spring. It's ready to burst on a moment's notice as soon as there is some sort of certainty from regulatory regime or some kind of sunrise in investor land or whatever it is. And I actually share the optimism. I think that there are actually good tech being built, and just energy here is just an evidence of it.
Yeah, I think a macro commentary there, I would be tracking things like stablecoin influx, and what makes a DEX successful. I mean, liquidity is just the kingmaker, because it just begets these network effect flows where liquidity begets more activity and begets more liquidity, and then you get this kind of force where people are attracted to you. So that's a huge focus of us, in addition to product And we've been doing actually very well lately for that, especially considering how it's kind of slow out there. But DeFi activity seems to have bottomed in a way. It doesn't seem to be getting worse, that's for sure. Lately it's been doing very well. And I would anticipate, as you see inflation abate, which means rates invariably go down when that happens, and then as you see the fiscal side continuing to spend like it is, I mean, that's liquidity. Like, QE asset swaps are not liquidity. Like fiscal expenditures, like the fiscal side of things, debt creation, like that's liquidity. And when that happens, that will come to our space, because we're a long duration space, and rates structurally going down, and they're a product of GDP growth and inflation, not a Fed decision. As those go down, long duration gets more appealing, and fiscal expenditures aren't stopping anytime soon, because we're a reserve currency, and that's part of being reserve currency, is creating enough dollars for the world to use. And so I think that continues, and you'll see a lot of assets go to crypto, because as you mentioned, like, it's almost negligent. Like, how can we not have some exposure to this? It's now getting, a lot of these people too think in herds, like, and now that Larry Fink officially says it's okay, well, now we can do it. They're not gonna, like, I think this is probably the first technological evolution where, like, retail got there first. Is there a counterexample for that? Like, I don't think that there is. Like, where the small guy got most of the winnings and will probably continue to.
Not the railroads.
Yeah, yeah, right? Because everything else has been like very capital intensive, required a lot of upfront expenditures, required a lot of like this coordinating force that was naturally aligned with corporate and state actions, and this one hasn't been. Yeah, I guess confluence back to that. Yeah, I see all of those things occurring, because I don't see how they can't, because inflation seems to be very obviously related to a seismic disruption in 2020 that was related to destroying supply chains and then airdropping everyone money in their account on the fiscal side. This is the first recession in history where savings went up. It's never happened before in the history of the United States, ever. So it's like, obviously inflation happened, but obviously we know why inflation happened. They've been doing QE since 2008. That's not why it happened. They've been doing it since 2001 in Japan. That's not why it happened, right? It happened because fiscal sprayed money everywhere and we shut down supply chains. That's going away. So, I mean, if you look at the yield curve too, it's clearly saying we're going down, despite whatever the Fed wants to say. So as that goes down, long duration assets get more appealing. The fiscal side keeps spending. It probably ends up here. So yeah, things will probably do really well. But you gotta, listen to the longer end of the curve and look at the fiscal expenditures, and then look at the places that are actually building real stuff. Like, we're building real infrastructure. Like, we're not building for we have a token. It's been doing very well lately, but whatever. Like, that's not our driving force. Like, if you have a product and people trade on it and use it, it happens by virtue of it. So it's just not something you focus on, because it happens as an externality of being good at what you do. So, yeah.
And even one step further on that, it's like, okay, if you do see, I don't know if we'll see nominal rates compress or real rates compress, but it seems pretty reasonable to bet that money's going to increase, which means, like, my metaphor is it's like winds picking up on the sea. And there are sailboats that catch that. Like, BTC definitely is a big sail, they catch that. ETH has a big sail, it catches that wind. That comes from the money flow. Now, when you add tokens to Urbit as an ecosystem, then your boats get sales. And these can have pretty meaningful sales. That's both for the infrastructure, but also for the apps being built on top of it. And I think what's really critical is seeing that coming up at some point over the next 12 to 24 months, making sure the sailboats are built. And when that wind comes, like, the Urbit ecosystem absorbs the capital and uses that to push things forward.
Yeah, as much as I find the lack of financialization here endearing, because, like, it's why I think this place is so great, because there's no grifters or scammers here, because you're wasting your time. Like, you can't be parasitic here. Yeah. And that's great. So we've curated, like, an awesome community around that. And I think the ethos and political alignment here is also fantastic, and something we should lean into and not be afraid of. But as the same token, though, there needs to be some financialization, just because that's how the world works. So, I mean, if you are able to do that in a way that kind of ties it in an intrinsic way to what you're building, I think that's good. But I mean, obviously that's good. But I think also too, I'm not even sure it needs to be tied intrinsically, just by virtue of, like, reflecting on really what makes SaaS stocks move. There's no cash flow return to you, and you don't have any claim on assets. Like, what assets are you going to claim? Like, there's no goodwill there. So, like, if they go bankrupt, you're not getting anything. You're not getting any dividends returned to you ever. You have no claim on any revenue in a real way. What can you do with it? You can vote. You can vote. What is a governance token, right? So it's like, when you, like, bare bones break that down, there's not much of a real difference there. There's some legal protections, but that's not what, talking value accrual, not legal protections. And so like functionally, I don't see much of a core difference there. So I guess that's to say, I don't even think that they need to give real yield, so to speak, to do well. Just empirically, 50% of the NASDAQ doesn't pay a dividend. And I think like book values are like almost no hard assets anymore. They've been going down systematically for like 40 years. There's very little of that. So you have no claim on anything real. So what is your
have sales up.
They have revenue, right?
No, sales on the sailboat. Like there's something for them to catch. There's something to still speculate on.
There's some like iron law of DCF physics canon. As revenue goes up and cash flows increase, that stock also does too. But like, it's just a DCF natural law.
Valuation.
Yeah, exactly. Just a natural law, I guess. I don't know. So I don't know. That's just something to think about, like how value accrual really works there, and if it even needs to have like a real yield component to it. Ours is going to have a real yield component to it. Like we're going to stake it because we want there to be a floor to it, like effectively so, because it's part of like our ecosystem for some market maker incentives. But yeah, as far as structuring those things, I think there's a lot to be gleaned from like actually brass tacks, how NASDAQ stocks are really valued and what you get when you buy it in like the worst case scenarios, best case scenarios, and how you get it. So.
Got it. I think, so bringing the convo back to Urbit, I think, one of the key questions for investors is, why now? What's the inflection point, right? How are you thinking about that in the next 12 to 24 months? Are there any specific areas you're particularly excited about in the ecosystem? And where should builders be focusing on within this inflection point?
Yeah, I mean, like from our standpoint at CoinFund, one thing to know is that we invest from pre-seed to Series B. And so we're looking for founders. I work mostly on the early stage side, so more like the seed program. We're looking for founders who are extremely mission driven, which like, I don't have to really say that in this room because I know the Urbit community is extremely mission driven. But like one of the advantages of working with founders in that stage at CoinFund is that we can support them through the growth. Today it's up to Series B. In coming years we'll probably extend that as well. What's exciting about why now, I think, is just a couple of years ago. Urbit is more or less MVP, like it's feature complete. And again, there's a lot of like core development, of course, left to do, but it has enabled entrepreneurs to start coming onto this new frontier and start building apps. And what we are looking for is a certain level of maturity and commercial thinking in founders and product thinking, because I think for Urbit to be ultimately successful, it has to have, just like any decentralized network, including Ethereum today, it has to have apps that people love to use and want to come back to use. And like the model that I always have in my mind is, ChatGPT. ChatGPT is one of the most successfully and fastest adopted kind of tech products out there. I gave it to my 86-year-old grandma who only speaks Russian, and she was able to use ChatGPT instantly, right? So this is a product that has a few properties, like you can communicate its value proposition like in 1 second. You could let someone use it, no matter where or who they are, in 1 second, and everybody wants to try it, right? Like these three properties is something that no Web3 decentralized app really has today. And I think Urbit, more than other platforms in a way, has an opportunity to create things like that. And that's driven by Urbit's community and the fact that it's architected to create sort of communities online. And because it's probably some of the best user experience in Web3, as I've said.
Yeah, that's right. I was at dinner a couple of nights ago, and we were talking about ChatGPT. And what's interesting is GPT-3 has been around for a long time. That didn't really get adoption. It was actually changing the UI UX a bit, and the way that you're targeting it, and the way you're going to market. So I think about that a lot with Urbit, like decentralized front ends we talked about, for instance. That's possible on Urbit. It's a weekend project to build. It hasn't been pushed out at scale yet, though. That's a really big opportunity. Like, you have clear product market fit with applications that can be delivered with Urbit today. So yes, when we're in this infrastructure application cycle, I think in that, if we were to create an analogy, we're probably at like the MetaMask moment equivalent for Urbit. And that now you can get on and you don't need to be technical. You don't have to like beg a friend to host it for your ship for them, or your ship on their computer. So we're at this cusp where like it's easy to get onto the network, and now let's just start doing things that have product market fit already with the infrastructure that already exists. And there's a lot of entropy in the system. Like you saw that with Vaporware creating Milady OS, and it's kind of a completely Urbit abstracted experience. You're getting the benefits of Urbit and you don't even know you're using it. So I want to see more of that, because a lot's possible despite the infrastructure improvements that still need to happen.
My take is very much of a weird take, which is, being the technologist that, really think about, well, geez. All right, there we go. All right. Some time ago, I think it was like 30, 40 years ago, Alan Bloom, one of the American philosophers, had a firing line interview with William F. Buckley, and he said art is something that's useless and beautiful, and that's why we should make more of it, and that you don't start with notion that it's going to be commercialized. Not to say it shouldn't be, but I'm saying that all the good works of art wouldn't get funded if the objective was to commercialize it. And so looking at it more from like the non-deterministic computing and all that stuff, and some of the really science fiction-y stuff that's being proposed, I guess that's where I fall in. I mean, there needs to be financialization. There needs to be incentive to build bigger and bigger things that is scalable and creates wealth. But at the same time, there needs to be this like a skunk work type of people who are willing to fork up money in a much in the same way that I think the description for this talk had something about I'll drown you in money or something like that, right? So yeah, maybe there needs to be some sort of patronage here as well, where some ideologically aligned software engineer is willing to fork up some money for some sort of weird tech project, right? Because it's like creating new art. And that's the way I look at it. So some of the projects that I've helped fund are mainly those. And then the other sort of selfish desire is, they're twofold. One is I'd love to see this project succeed, because it's kind of throwing it's right in the face of like the common trend. So I want to make sure that it succeeds. And then the second part is that there's a commercial need for my company. Like for example, there's a lot of technical needs that can be solved by migrating to Urbit, for example, and using that as infrastructure, which supports the argument about why it should be financialized. Right. So I guess I'm on the let's throw money at it, but let's make sure that there is a tangible outcome for these fine folks, so that it's worth it for someone to become a patron in the early stage. I think that's my take on it.
Perfect.
Yeah, I don't think there's
we'll close off with Dmitry, and I want to take some time for Q&A questions as well.
Oh, okay, sure. Yeah, I don't think there's going to be a now for Urbit. I think it's an incremental process. For the very same way, like we proselytized a handful of who knows how many Bitcoin and ETH people from the Canadian truck driver censorship, like from the bank account thing. Like it's just going to be a piecemeal thing as people begin to be exposed to the reason of why are they decentralizing this anyway. I don't think that's self-evident to like normies, and like this has more friction. It doesn't have as many people on it. Why am I? Facebook is fine, and so I think that's going to be exposed. Like necessity is the mother of invention, and if in an idyllic world where there was no censorship and everything, I mean, we actually wouldn't really need this tech. We could actually just have it at a brokerage and a bank, and they would adhere to their constitution and all that, and you would be fine, but they don't. So like, I think that gets exposed to people more and more as the political ramifications happen, where they realize, okay, wait, I can get kicked out of XYZ, I get censored. So, and I think Urbit begins to be shown as a solution to that. And I think that's, I don't think it's a now moment. I think it's a slow accretion and build up the same way people will understand that with DeFi. Like, why am I doing it on chain? Ideally just be a broker, and that's easy. Once we get that, remove that friction out of the way, and then show you, oh wait, we can't do these things to you that negatively happen here. Also, there's economic benefits. I think structurally, like a lot of this stuff will longer term by virtue of how it's made, it has to have better unit economics because the more entities you disintermediate out of supply chain, the more value accrues to the two parties in it. And as that's removed, you retain more people. So we're taking people out of financial supply chains, essentially. So I think longer term, once we scale this properly too, it's just an economically beneficial thing to engage in, as well as not being censored. I would be most excited about stuff in Urbit, like I think the beauty is found in like the banalities and stuff, which I think you probably touched on. You know, removing the friction out of basic common stuff when there's a telegram of Urbit that I mean, we have that already, but that like we use as our default. You know, because it's so boots up, we use right away, and it becomes our kind of home base of sorts. So boring stuff done well, and with as little friction as possible to make the user experience better. That's the stuff that moves the needle. And I think what shows people that they won't even come here to begin with will be the negative effects of governments and what have you that I don't think they can help themselves over. They're going to keep, they're going to do our sales job for us in part, I think, and that's what incrementally starts pushing people in our direction.
Yeah. Can I jump in super quickly?
Yeah, of course.
I strongly disagree with that. Okay. I think it's going to go in waves. I also think that's the equivalent of looking at crypto as the financial system and saying like it's going to take time for FX trading to come onto crypto, which I totally agree with. But what drove crypto adoption was the waves. It's like there's a wave where you realize, oh, something's possible. With ICOs, for better or for worse, you realize capital formation is possible in a way that's not possible in the real world. For DeFi, you realize like there are instruments that you can create that are possible, not possible in the real world. For Urbit to date, we've been going slowly, saying, oh, we're going to create thing, and eventually, as FX markets move on chain, everyone will move on chain. There are unique experiences that can happen on Urbit and can't happen anywhere else, and those need to drive the waves of adoption. Because I think if the waves don't come, the slow trickle will never actually make it.
Yeah, okay. Let me define what I mean by incremental, I guess, more. Yeah. I don't mean like the same amount every day, like linearly. Yeah. So I do agree with you to like ebb, flow. Yeah. I'm with you on that. Okay. And I just think the galvanizing force for that, though, will be via negative exposure to why you want to be here to begin with predominantly. And then you'll see, wow, the friction isn't here, I can use this easily, and I don't have to deal with these negative effects. Because again, why else would you decentralize all this, right? Like it makes it less efficient. We're doing this because it makes it more robust to negative things. And I think when normies see the negative things more apparently, then they start seeking out these solutions more readily. And it probably comes in waves. But it probably comes in waves oriented around particularly negative actions being taken, and then fiscal financial movement. Probably some combination of that drives.
I think there could be proactive waves as well, but that's longer.
Yeah.
Well, Continue.
Awesome. Well, I really appreciate this really engaging discussion. I think we have like 7 minutes left. It says open up the floor to any Q&A for the panel.
Q&A.
Okay.
One there?
Hey, what are some ideas or things you would look for, be interested to fund that are Urbit adjacent, but like basically prop up Urbit? I think what Sorp is doing is a good example. It's on Urbit, but it also does something a little bit Urbit as a entire thing as we know it right now. What would be other interesting things that you think you could build also around that basically directly accelerate and or put win the sales of Urbit?
I can jump in. I think Urbit should be integrating with, well, let me take a step back. The blockchain space is in the process of slow and long-term modularization. So you might have heard this idea of like modularization thesis, and that's basically the idea that all the different facilities of a blockchain, the data layer, the execution layer, the consensus layer, the settlement layer, are actually kind of coming out and being unbundled into individual networks that specialize in that thing and enjoy the largest economies of scale, kind of independent of like the blockchain stack where they will be eventually used. And like when you think about, for example, storage in Urbit, today Urbit is very good at hub and spoke models, right? You start an Urbit group, the data for your group lives in sort of the host's machine and everyone connects to that chip. But of course the problem with that is that it creates this central point of failure. And by the way, that hub and spoke model can be very, very effective and good in certain contexts. And it's actually kind of bad in a group context, right? Because Urbit chips do go down, and if your host machine goes down, you lose the group. One way of solving that problem is finding a data layer that's more persistent, more decentralized, has higher uptime. There's plenty of these things in Web3 in general, right? There's things like IPFS, there's a bunch of data layers like Celestia, et cetera, that are being built out. And it'll be interesting to see Urbit connect to those kinds of modules, because what that will enable is an extremely rich design space for Urbit apps that has any combination of features that you want. If you want a hub and spoke model, you can have a hub and spoke model. If you want infinite persistence of data, you can have that with something like Arweave, et cetera. So, Lucas, one answer to your question is more infra in the form of connectivity with decentralized networks is something I think is very fundable.
Yeah, I think it being just a portal you can go to for access to anything, like most things in the Web3 space, is kind of what does it. Like, it can be your home base to affect trades because everyone has a lot of their front ends there. And any other sort of thing that's Web3-esque. And if I don't have to, the less I have to hop around to use stuff, the more valuable your home base is for me as a user. And I think Urbit being a front end for a lot of that stuff as a home, space you check into will definitely drive it being very sticky and kind of propagates it from there.
Yeah, it's like Urbit is a nucleus for blockchains, is my mental model for this one. And what's interesting too is there are a lot of applications built across crypto that I look at and I'm like, they're just thinking what Urbit is. They just haven't figured out what Urbit is yet. Like there's an operating system I saw, Crypto McKenna is backing right now, and it's just like this desktop OS type thing, and I'm like, that's literally just Realm. Like this exists already, and you're not gonna build it with the infrastructure that you need because, well, you would need to build an Urbit-like platform. Where I look at Farcaster, I look at like all these decentralized, Twitter clones. It's like, blockchains are the wrong product for this. So pretty much every internet application that has been attempted on a blockchain should just be built on Urbit.
Yeah, I remember, I think this was from a podcast a long time ago with Ted, or one of the tech guys I was listening to, where he's like, not everything needs to have this super secure blockchain-esque layer for messaging. Like, you need that for financial transactions, that's important, but it's wildly inefficient for comms. You can just have it cryptographically signed peer-to-peer kind of thing. It doesn't need to be codified in a way that has a history reference and on a full node for all of history. So yeah, I agree with you. Yeah.
It's like if a value transfer, put on blockchain. If no, don't.
Yeah, that's a good way to do it. Yeah. Try to make it as efficient as possible, and that's a good way to put it.
To your point, a lot of the Twitter clones out there, like Blue Sky, whatever, they are federated.
Yeah.
Right, and federation, in some sense, is a form of decentralization. It's a higher level form of decentralization. But I agree with you. I think the way that you can put Urbit chips together is actually much more amenable to federated systems than public consensus, super expensive blockchains.
Right. I mean, the way I think about it is Urbit is a general purpose distributed computing platform where, for example, Plan 9 from Bell Labs a long time ago tried to be or network attached storage, but they didn't have a templatized form of how it should be instantiated. So for example, we now think about layer 1 as a slow but very correct layer, and then layer 2 as fast and kind of loosey-goosey. And then that mental model can't easily be transferred into what Urbit does. And I think that's what confuses a lot of people. So, creating this sort of mental model, making it easier to explain, and then also creating a deployment template that showcase the tech, for example, corporate chat, or SSO, things like that. I think that could be something that adds tangible value to public at large, and then also allows for greater financialization. So that's the way I look at it. But if you try to take away pieces and split Urbit into 1,000 little pieces, or try to find an alternative, you're not going to find everything that Urbit encompasses. That's the way I think about it.
Correct. Yeah. So it looks like we're at time. I want to thank our wonderful panel here. Everyone's contact is here, so please reach out to any one of us, and have a great rest of the day.